Hello, agents. Hello, everyone. So real quick, go through what's happened the last week or so in fixed annuities with the weekly update. But let me just tell you one thing that has happened is treasury rates and all rates bounced up and down. Check this out, 4.007. We just went back over 4 from being well into the over 430 range. We went down to the 360 range, and we saw some serious rate changes from the companies up to 60 basis point drops. So let's just get into what's been happening this week in the world of fixed annuities. And, we're just going to view my social media pages. This is where I pretty much post everything, and on my YouTube, of course. But let's take a look at this. So the first one we're going to talk about is this rate here was the hot rate for August, right? This was a 550 for 7 years with a good A- rated company, had all the bells and whistles, client friendly, 10% withdrawal. Actually, this one had a 5% withdrawal, but free withdrawal, full death benefit. So that rate dropped from 550 to 5 starting on the 13th, which is Tuesday. So you got a couple days still left on that one. But wow, 550. So that's a 9% drop in just that one rate. And that one had a great commission too. That was what we called the hot rate for August. Now it's 5, not that hot anymore. So that one plummeted really quick. We had seen some serious rate changes, and that's what I was saying here. When there was a 20% reduction in all rates, I did this little ad. Yeah, MYGA rates will get slashed, and sure enough, they got slashed. Likely only hours left to secure a plus 5% rate. So this was the ad I did like a few days before regarding that, before they changed it. And then, yeah, sure enough, they changed it. I just did a little add on, like, well, how does interest rates affect in banks and everything? But that's kind of sour now because it bounced back. The rates bounced back. If you're looking for super high quality product, this company just added, they're an A+ company. They just added a new band. It's called the $500,000, the high band. And they give you a 5% interest rate with a super high quality company. It's a walk away. You can see their ratings over here. Where'd we go? Where'd their ratings go? Anyway, their ratings were super high. A+. I don't know what happened here. Hold on. I'm going to pause the screen really quick so I can fix all this. Hold on. There we go. Okay. So yeah, it's an A+. It's hard to see in this video, but it's A+, AA-. There are 96 Comdex. This is a walk-away product. It has a 1% minimum. That's the only catch with this one, the low minimum, but it is a walk-away and it is A+. And it's a 9-year lockup. So, this we were talking about as interest rates are plummeting, 5 for 9 would have probably been a good lockup. You might be able to do a little better as these interest rates increase. But yeah, that was it. This was my, this kind of just broke down what the treasuries were doing in the drop. This was at the 9.7 and it even went below that. So as you can see, the blue line here is where we were in 2022. The orange line was in November of this year or so. And this white line is the current, what we were doing last week. So yeah, you see we're still well, especially the short-term money is super better than 2 years ago. And even some of the long-term stuff is still much higher. But yeah, we really got a hit in this area from the like 7 and 10 year yields. But again, that's bounced back. This is the SPIA rates. This was a reduction. So I'll scroll down a little bit, you can see. So here, let's just look at the male 75 was a 9.94. But if we scroll down a little, you can see it was a 10.01 just 15 days earlier. So those rates did adjust. We're still working with combo split annuities for the people who want the exclusion ratio. Still good numbers there on the period certains because they're shorter term, right? They're like 5 to 7 years. So we can still get a decent period certain rate out of that. The Feds hold rates steady, right? Where there was but they did signal a decrease. They signaled a decrease. And I think that might've been part of that. And the jobs report was supposedly what dropped rates. But they're maybe supposedly signaling a possible rate decrease come the next Fed meeting. Who knows what will really happen there? There's that 550 again, and some other information here. But also there was a 5.6. Okay, so I'm going to switch to my X. But what I was going to say is there's multiple lawsuits trying to hold that DOL Secure Act up. So the fiduciary rule, DOL, all that's been held up in court. And I think that has something to do with that recent Chevron deal. So Yeah. So anyway, that 560 now I think is 520. So we lost 40 points on this one. Beware of that. That was a nice rate. You could have got 560 for 5 years. That has been gone. 2 rate decreases since that of July 25th. So today's only the 8th. A lot of insurance issues going down in Florida with, pricing out of stuff we talked about earlier. Here's the U.S. judge blocks the latest version of the Labor Department's fiduciary rule. So there's information on that on my X. That's why I say follow me on LinkedIn, YouTube, and X for the most up-to-date information. So, 550, we talked about that. We talked about this. Fed holds rate steady. So it's basically just a repeat of my LinkedIn there. And of course we do an Instagram too, but I'm not so much on that because it's a weird format, right? You got to do the square format. So I have to redo everything with like a square around it. But yeah, so pretty much for the week, we have rates decreasing on MYGA and SPIA. We do have some rates holding with the minimum guarantees at 3%. So you can still get a really good long-term, say 520 for 10 with say a 3% minimum guarantee, or you can open up some flex stuff with say $5,000 that you can add money to that has a 3% minimum guarantee. So should the future bring lower rates, you'll have this flex product to jump into. So anyway, that's the update for the end of July 2024, and we'll talk to you soon. Hope all's going well. Be sure to follow me on LinkedIn and YouTube and X for the most up-to-date information, and we'll talk to you later. Bye-bye.